For the first time this year, the S&P gained over 1% for 2 consecutive days. But today, we're seeing a little bit taken off the table. Joining me is Jonathan Corpina to tell us what's happening. So, what's happening, Jonathan?
How you doing, Olivia?
Good, thank you.
Good. So I think we're just continuing to see volatility in our markets. Open low today. We've started to rebound a little bit here. Flat at the point right now. No different headline today than there was yesterday than there was last week, right? We're still talking about U.S.-China relations and what's going to happen with tariffs. Interestingly enough, later this week, we've got Jackson Hole. We're going to get some comments coming out of there. Additionally, some comments out of the Fed. So I think, we've got a combination of a few things. Watching the headlines, watching what's going to come out of Jackson Hole, and also we're getting towards the end of the summer. 2 weeks left to go. A lot of people are taking vacation time at this point right now. So we are seeing less volume, which might add to some additional volatility that we have seen in our trading sessions.
Are you watching anything that's going on with Hong Kong?
Yes. I think you have to keep that on your radar screen. Does that directly translate to what's happening in, our markets and our economy at this point? No. But clearly that, the images that we're seeing coming out of Hong Kong is something that we should certainly pay attention to.
Like you said, the Fed is hitting up Jackson Hole, which is not just Instagrammable worthy, but they're going to be talking about a lot of policy. What will you be listening for?
I think we're going to, look for any, new transparent information as to what they might think the next few months might look like. We've been talking about U.S.-China for quite some time. We're trying to gauge timelines and how things are going to look moving forward. And it's no more clearer now than it was 6 months ago. So maybe there might be a little bit of insight there. Not that they know how it's going to play out, but just how they think it's going to affect our economy. From that point of view, I think, a lot of smart people there. They're going to put their heads together, and hopefully we get some good guidance.
Like I said, I think that we need a Fed selfie. What would you think about that?
I think that's like a parent selfie. I don't know. That might be a little too aggressive.
It's a little aggressive. A little aggressive. Well, definitely not with their policy decisions. It seems like we are pricing in a rate cut in September. Jonathan, are you noticing any trends in stocks right now? Energy's a little bit lower today, but that's been doing okay. What are you watching?
Yeah, and I think energy clearly has had some pressure on it. But when you talk about interest rates and how that relates to our economy, you have to look at the financials. They have been under pressure, trying to kind of pick their head up when they can, but knowing or guessing that we're going to have another rate cut coming down the line, and might be additional ones after that as the president continues to tweet about that. I think the financials have been one that have been lagging behind, and at some point you might want to start dipping your foot in the water there. We saw them also get hit pretty good with the inverted yield curve earlier last week. So from that point of view, I think investors might be a little wary of that sector just for now.
Well, then we'll keep an eye on that one because, hey, who doesn't want to buy at the lows? Thank you so much, Jonathan.
Thank you. Have a great week.